What is going on, guys and girls? Welcome to my channel. This is Jason, aka the Frugal Investor. This is a quick video to give you guys a quick update on my portfolio, how the portfolio is doing. To be completely honest, the portfolio was in the red for a very long time. Today is actually the first week. This is the first week that the portfolio has turned to be green. And clear right now, it's up by almost 1% overall. The dividends are almost $3,300 for the past since November 2020. So almost for the past 1.5 years, almost made $3,300 in dividends. And so far the portfolio is up by only 1%. Now the market was in a decline and I was buying heavy when the market was in a decline. I've added a lot of money to a lot of companies. The number of holdings that were only about 22 to 23 previously, before this dip, now the number of holdings have gone up to 34 because of the deals that were available in the market. I've added a lot of new companies to the portfolio and I want to give you guys an update on that today. So with that said, let's get started with Google. Google is up by almost 5%, and I did add a lot of money to Google recently. I added almost $5,000 to $6,000 just to Google alone, and it's one of my biggest holdings at this time. Followed by Microsoft. I did add Microsoft recently to my portfolio. Again, I was not a big fan of Microsoft, but the company looks solid, the numbers look great, and the growth looks great, and they have great pricing power. So I decided to add it to my portfolio. Also, one of my biggest holdings. Costco. I have been holding Costco since the beginning of this year when I entered into the market. So this portfolio I started in the beginning of this year. I sold everything in December last year, and this is kind of what I bought during the beginning of this year. And the gain since the start of this year has been only 1%. But the dividends I will count from the start of my portfolio, which is November 2020. So moving on to Costco, I've been holding since the beginning of this year. I'm all up by almost 17%. In my opinion, Costco is still a great buy. Company is still not that overvalued. It's a great business. So I think a P by E that it's trading at generally in the 35 to 45 range, it's warranted, and I think it deserves that. Followed by Apple. Apple is still also cheap right now. I've been holding it since the beginning of the year. I did add some more money to it, and currently I'm up by almost 18% since the start of the year. Overall, a very great company to hold and buy. Still available at a very good price compared to its competitors. Very great P by E ratio, and I think it's still a buy. So Google stock also. Google stock is going to be going through a split as per the news. So that will be interesting to see. That will push the stock up higher a little bit. So that will be interesting to see how that plans out. Facebook, I'm down by almost 31%. Facebook has been taking a hit recently, but it's a great business, so I'm holding on to it. And I think in the long term, I will be coming out as a winner in Facebook because I think the business is solid. They have a cash flowing machine like Instagram, like Facebook, and like their virtual reality platform, which will also be generating cash down the line 5 to 6 years. And then, of course, Metaverse is there, which is very innovative, and I think it'll be a winner long term. So Facebook, I'm holding down short term by 31%, but bullish long term. I'll be holding. Might be buying more, but still, right now I'm holding it. Lowe's, again, company has some debt on the balance sheet, but I'm still holding it, bullish in the long term. And I did add Home Depot as well, which we will talk about down the line. But Lowe's is there, one of my biggest holdings as well, down by almost 4%, but I'm holding it for the long term. And I think it's a consumer company, and I think it's great to hold in your portfolio. Equinix is a data center REIT, again, a fastly growing company, down by almost 12% for the year. And I'm going to keep holding it for the long term because the data centers are the business of the future. So I think it will perform really, really well. They're well positioned in multiple continents to reap the benefits of the growing technology sector, reap the benefits of the growing population that is becoming more and more tech friendly, reach the benefits of metaverse and whatever internet, whatever phone things come out. Data centers are the hub of that because they store all the data, they store all the machines, they provide a lot of cloud storage and whatnot. So I think I'm very bullish on data centers long term, and I'm holding it for the long term as well. Moving on to Arrow Financial, I'm bullish on financials, I'm bullish on banks. So I have been buying this stock, and it's one of my biggest holdings currently. It pays a great dividend of 3%, and it is a small community bank based in southern New York. But they have a fabulous, fabulous business model. The way they run the bank is very fantastic. Also, they don't have a lot of debt on their balance sheet, and they have a very good tangible book value. So the price I'm paying for the stock, half of that I'm paying for the cash they have on their balance sheet. So that is a very great deal. Also, they were the only bank who didn't cancel their dividend during the 2008-2009 financial crisis. So that is also a very bullish point. Holding it for the long term. and I'm very bullish on financials. Medifast, again, Medifast is a consumer company, and currently they are only in Northern American market, but soon they'll be spreading out across different markets, down by almost 15%, but I'm holding it for the long term. So we will see how this plays out. It's a mid-cap stock and it's a fast-growing company. Also pays a dividend, so we'll see how it plays out. It's a network marketing company. We'll see how it plays out. Nvidia, great company to buy. Bullish on it in the long term, up by almost 14% for the year, and I'm going to be holding it for the long term, and I think this will continue to do great. Recently added to my portfolio because it was available at a great price during the recent dip, so I got in during that time, and so far we are up by almost 14%, and I'm bullish on it in the long term as well. Kimball Electronics, bullish on it in the long term, down by 32% in the short term. We'll see how this plays out. USANA, Kimball Electronics is a very small company. USANA, again, a small, almost a mid-cap company, down by almost 22%. We'll see how this plays out in the long term. Alibaba down by 34%. We'll see how this plays out in the long term. Right now the sentiment towards China and the Chinese companies, especially Chinese tech companies, is kind of negative. So in the long term we'll see how the sentiments change, how things change. Companies been profitable, companies doing great, business is great, the cloud business is growing really fast in China and in Europe. So it'll be interesting to see how this stock plays out over the long term, over the course of 4 years, 5 years. Let's see how this goes. JP Morgan Chase, almost like investing your money in a savings account, down by almost 17% in the short term, but in the long term it will be interesting to see how this plays out. Pays a great dividend at almost 2.5%. So long term I'm really bullish on banks, and I think this will be a great company to buy and hold. Schwab US mid cap ETF, I've added some ETFs to my portfolio, yes. So holding the mid-cap ETF, not a lot of money into it, just a small part of my portfolio, just to add the diversification bit, and seeing how this plays out, how the diversification helps me out. Capital One Financial, again bullish on it in the long term, down by almost 19% in the short term, but in the long term I think banks will do great, especially banks like Capital One Financial, which is almost a mid-cap company, and it's growing really fast. PayPal, same thing. PayPal, I'm down by almost 35%. Financial company, we'll see how this plays out in the long term. I think this will do great, but let's see how this plays out. Starbucks, a company has a lot of debt. They're facing some challenges in China with growing, but it'll be interesting to see how Howard Schultz, who is now again the CEO of the company, how he turns it around. He's the person who started the company, and then he went off, and now he's back. Now they got him back. They needed him, so he's back. So it'll be interesting to see how he turns around the company with the debt they have on their balance sheet, how he turns around the company, making it profitable and growing again faster, and also the issue they are going through with unionization and things like that. So it'll be interesting to see how that plays out. So bullish on it in the long term. I think this will continue to do better, and once Howard Schultz puts things in place, I think it'll be interesting to see how Starbucks performs after that. Trinet Group, very small part of my portfolio. It's an HR company, all down by almost 6%. We'll see how it plays out in long term. JPI, dividend paying ETF from JP Morgan and Chase. It's interesting. Pays almost a 7% dividend yield. So very high dividend paying ETF, not a big part of my portfolio, just holding it for diversification and for the dividend income. Netflix, again, not a huge part of my portfolio, down by almost 11%. The growth is kind of saturated now, in my opinion. I don't think there is a lot of room to grow, especially in the North American markets. But it will be interesting to see how they plan out their strategy in different markets across the world, especially Asia. It'll be interesting to see how they play their cards there, and because that is where the most of the growth can come from. So a very cash heavy business, as they need a lot of cash to produce content regularly, constantly. So it'll be interesting to see how this performs in the long term. Not a huge part of my portfolio. I'm just holding it for the diversification purpose. Not a big fan of this business, to be honest, but we'll see how it plays out. Insperity, again, HR company, down by almost 20%. Bought it at all-time highs. I did a mistake with that one, but we'll be holding it for the long term. We'll see how it plays out. HR company, generally they grow by 3-4% every year. Let's see how this one pans out. A Vanguard small cap, just for the diversification purpose, added a small cap ETF as well along with the mid cap. Triple net, national retail properties, so added it for the diversification purpose, for real estate, to get some exposure to real estate, commercial real estate, especially with the retail properties. So this will be a big boost and a big buffer for some part of my portfolio, which is almost very minimal, almost less than 1% of my portfolio. So just to give that give that buffer with diversification. Plus, I'll be adding more money to this one because it pays a good dividend. And retail, commercial real estate, especially retail, um, triple net properties, they don't get hit that hard because the tenants, they get hit hard sometimes, but most of the time they're safe from the external circumstances. So that's what make me a lot of bullish. That's what make me really bullish on this one, and I'm holding it for the long term as well. Extra space storage also added for diversification purposes. Home Depot also added it for diversification purposes, and I'm going to increase my share in Home Depot. TripleNet and Home Depot are going to be one of my biggest holdings sooner. Salesforce also added it because it was available at a great price. Home Depot was available at a great price. Tesla was available at a great price when I bought it, almost up by 13% right now. I don't think I'll be adding any more money to it. Just whatever I have, I'll be keeping it. But we'll see down the line how it performs. If it goes down, I might buy more. But Salesforce, I bought it at a good price. 3M, again, it was available at a good price. Dividend paying company, very safe, stable dividend paying company. So added it at a good price as well. Affirm, these are just there for diversification purposes, less than 0.5% of my portfolio. Intuit, less than 0.5%. Atlassian is what I use on a daily basis. I work as agile coach, and Atlassian team software is what I use on a daily basis, like my bread and butter, and I'm very bullish on it. It's a great tool, great platform for agile software development and agile processes. Shopify, just added it for the diversification purpose, was available at a good price. It'll be interesting to see how it plays out in the long term. In the long term, I'm bullish on Spotify because I think the growth has just started. Roblox, diversification purpose. Asana, diversification purpose. So Asana, I already took my gains out of Asana. I think it was up by almost 58% from the time I bought it, and then I sold it some, and then this is what I have left, which is down by 7%. But it's just there for diversification purpose, less than 0.1% of my portfolio. So the main holdings are there. The main holdings are doing good. Some are down, some are up, but that's the game we are playing. And I took the use of this dip and I added money to the portfolio, and I was able to buy things at a good price. I might be taking some money out of the portfolio to buy some real estate, but we will see how that pans out. So far, the portfolio is doing great this year, down by up by almost 1%, and we'll see at the end of the year how we play, how we perform. And this is a long-term portfolio, so not that it matters, but just it's interesting to see and to show like what you can achieve by just by dollar cost averaging your salary, 40-50% of your salary every month, if you do that, and what you can achieve. And that's what I try to show on this channel. All the holdings that I'm buying, that I'm selling, whatever I'm doing with this portfolio, I try to show on this channel. Please don't forget to like and subscribe. Thank you for watching. This is the Frugal Investor signing out.